The committee debating the road ahead for the markets and revealing several new moves in their portfolios. Joining me for the hour, Josh Brown, Stepanie Link, Jason Snipe, Jim Lebenthal. So we do have the markets higher, nicely so. CPI mostly in line. I think we can say that. Yields a touch higher. And we're going to get to the whole market story. I mentioned the bounce in NVIDIA and some of the other momentum moves, but we have several moves to get through from the committee today. And we're going to start there. And we're going to start with Josh Brown, who bought a few new things. I want to tell you about all those. You bought eBay, which hit a 52-week high on Monday. That's the highest since February of last year. Tell me why that one has been added to your portfolio.
So this is a breakout in progress. It got above long-term resistance, which was 48. I think it'll hold that level, but we'll have to see. This is the highest level eBay has traded at really since April of 2022. It had been in this range between 38 and 50 since the summer of 2022. So this is basically a stock that can't get arrested. They've had literally no support whatsoever anywhere on Wall Street. Nobody wants to talk about it. It's 10 times earnings. We know the reason why it's 10 times earnings. Facebook came into the marketplace business a few years ago, stole some of eBay's thunder. There's not a lot of growth here, but that's the point. You're not paying for growth. At this point, you're paying for nothing, and they've accelerated the rate at which they're returning capital to shareholders. It's a 2% dividend yield, and buybacks are going up. And they've got a CEO in here who actually was very instrumental in this company during a higher growth phase, who is now back. And I think there's more to be said about the future. So I think it's very low risk here. I have a stop loss. It's not necessarily a long-term investment, but I like it from a trading standpoint. Okay, keep an eye on that as it gets a little bit of a move here. So you've been talking a lot about the NASDAQ. We obviously have been talking a lot about the NASDAQ. You bought the actual exchange stock, NDAQ. Tell me why you bought NASDAQ. NASDAQ also a breakout in progress. This has an RSI of 75, so it might need to cool off a little bit. It's 13% above its 200-day, 5% above the 50-day. NASDAQ broke resistance at 58. So you can see clear as day on the chart. Every time it bumped up against 58, 60 bucks, it fell off. Now it's above. NASDAQ is the #1 play if you believe capital markets return in the second half of this year, as I do. I think we're going to see IPOs. I think we're going to see a lot of activity, and not just in the United States. NASDAQ is operating exchanges all over the world, and they did something really smart. While nobody was paying attention, they went from being just an exchange business to really being a financial services business and software company. And so they've got now 3 different businesses under the one NASDAQ umbrella, all of which have the ability to kick in earnings and revenue growth this year. And you had some insider buying in the stock over the last year as well. So I like the stock here. I think get into the 70s. Again, it's a trade. I have a stop loss in place, but it's a breakout in progress. Yeah, I hear you. Another bump there. CBRE. Tell me about that one. That's also new. Yep. Similar to a lot of the things that I talk about on the show, I like these businesses where you've got a technical breakout, but you've got a fundamental reason that the market is only just now discovering. If you were to talk about CB Richard Ellis or Jones Lang LaSalle or Cushman & Wakefield over the last year or two, everyone would tell you, oh, you're an idiot, commercial real estate is dead, it's going to be a depression, blah, blah, blah. They don't understand the business model shift underway here. Do you think that's news to CBRE, that there's going to be some challenges in commercial real estate values? Like, honestly, how childish can you actually be? So what this company has done over the last couple of years, knowing what the marketplace would be like, is they've shifted into a much more services-heavy ARR software-like business model, where basically they benefit from the volatility because they become the go-to player for every corporation in the world. And by the way, this is global, trying to figure out their real estate portfolio, right-size their leases. What do they own? What are they renting? What do they need? What do they have to get rid of? CBRE is going to get paid on this stuff coming and going. It's not just about transactions. Now it's about facilities management. It's about loss mitigation. They're in the mortgage business, et cetera, et cetera. So This stock's breaking out. There's a reason why. People understand this. There was a lot of resistance at 87. It hit that level 3 times. Fourth time was the charm. And again, this is a trade, but I think we could see the stock north of 100.
All right, so you bought more of something else, too, and we're going to get to that in a minute, but I want to spread the ball around here. Jim Lebenthal, you have some moves of your own that are quite interesting. I'm going to go to the buy first, and then we'll go to something that you trim, because the one that you bought is controversial, to say the least. It's New York Community Bank Corp.
Yeah.
You bought this in your personal account.
Thank you for pointing that out.
Okay.
Yeah.
Tell us why you decided to do this.
Yeah, so first off, no clients are in this if you're listening, but also folks at home. What I'm saying to you is this is a speculative trade, all right? It is higher risk than the normal investments that you hear me make. Now, I do my normal rationalization on this, and many people have fallen for this siren song, but here's the analytical rationalization. They have, of course, they have some uninsured deposits, but they have cash and liquidity on hand that's about 160% of what those uninsured deposits are, so that if they went out the door, they have the liquidity to match that. They have equity that's equal to taking basically a 1/3 loss on their entire commercial real estate portfolio, which, apropos of what Josh was saying, is a little bit unrealistic. Now, people will say, of course, commercial real estate stinks and it's going to go down. It's not all going to go down that much. I think, though, the rationalization has to be held in balance against the speculative nature, which means a bank run could happen at any time. We saw that with First Republic a year ago. We rationalized that then. It didn't matter. So that's the element, folks at home. If you're listening to this, you have to go in eyes wide open. Here's a secret sauce, Scott, that really got me thinking about this. Number one, Steve Mnuchin's no dummy. I mean, let me leave it there. He just put $1 billion in, not him personally, but with a consortium of investors. And frankly, not only is he no dummy, but I think FDIC, Treasury, and the Fed knows that this bank has to survive so that future trouble in the banking system doesn't come home to roost on the Fed's balance sheet. What I mean by that is they can't let mergers like what New York Community Bank did a year ago go under, and they can't let white knights come in and get blown out, which is what they can't let Steve Mnuchin happen. So there's an ephemeral aspect on top of the rationalization, but folks, it's speculative.
Okay, so we have the highs of the day there. Does it bother you at all that that stock, as I see it now, let's call it $3.50, looks to me to be below where it was when the news hit that Mr. Mnuchin and co. were coming in and doing what they did, and what that might suggest about the fundamentals of this business moving forward? So the stock obviously got a huge lift the moment that news broke, and it was a handful of days ago, and we were all sort of transfixed by what was happening there. But how would you address that?
Well, of course, this is something that somebody has to be uncomfortable if you're buying this stock, Scott. And again, that's why it's not for clients. What gives me a little bit of comfort is that it looks like the tangible book value is in the mid-6s, so you're buying something that's around 55% of tangible book value. And look, remember, before the Mnuchin deal hit, the stock was below $2 a share. So I'm going to have a tight stop. Well, not that tight.
It was like give this some $1.85, $1.86,
I think it was,
like
right?
That.
And then it popped up to the high 3s, and now it's back down a little bit. Remember, the warrants that they struck are struck at $2.50. The shares that they got are struck at $2. Mm-hmm. Look, it's not without risk. That's why I'm heavily qualifying this. I'm going to give myself to 270 as far as a stop, and if it hits that, I'm out, and I'm just not going to look back.
Josh?
So, Jim, I think one of the things that might be accounting for what Scott is bringing up, the fact that this stock is not higher than where it was since the rescue was announced, is probably something technical that maybe buyers like yourself could actually take advantage of. This is going to have to come out of a lot of indexes. This is, first of all, no longer a profitable company. It's probably not going to be a dividend story, at least anytime soon. Nor will it be a shareholder buyback story, nor will it be a quality story. So all of that, all of those indices that are going to have to kick this thing out means a lot of fund managers and a lot of index funds are going to have to kick it out, which is probably where the selling is coming from. But if you're Jim, you don't have those restraints. And so you can get into something like, and I'm not in the stock, but you can get into this while other people are forced sellers. And that could be advantageous in a world where index funds are so influential. Do you guys agree with that?
Well, you know, one thing I'll say, Josh, is maybe the reason it's up today is certainly not because I'm buying it, but because they are doing a reverse split, which the idea of which is to get it over that $5 threshold, which for a lot of institutional managers is that floor. So that speaks to that. But yeah, what you're saying, this is no longer a dividend aristocrat. I mean, I'm saying that a little bit tongue in cheek, but yeah, there are going to be some forced sellers here.
So the other area of the market, which I think has gotten the most scrutiny of late, and deservedly so, is the chip space. For the magnitude in which a lot of these names have gone up, and not just NVIDIA. We've gone down the list almost every day, you know? Supermicro, AMD, blah, blah, blah. And you mentioned you're a little uncomfortable with some of the exposure you have in that space. So you trimmed NXP. Tell me why.
So first off, it's a sector call, and I was way too overweight. I said this on air yesterday. I'm 14% chips and chip equipment in my portfolio. That's simply too much. So I'm bringing it down to 12%, which I think all of the other investors here will say that's still pretty high. But you got to trim your winners along the way. NXP has just been a very solid performer for 4 years, and it has 50% of its business tied to automotive, which I've got a great exposure in GM. So that's the obvious candidate as far as where to trim. You know, Qualcomm's had a heck of a run too, but I think there's more legs there. It may step back a little bit before going forward, but NXP, just because of that duplicative aspect with GM, was the obvious candidate to trim.
Takes me to another stock and another committee member, and it's Apple, which has had no momentum, to say the least. And today, in a market in which you're getting a bounce in NVIDIA and Microsoft and Meta and Amazon and Tesla and Alphabet and AMD and Uber and Costco and a lot of these big momentum moves, Apple's red. And yet you've bought a good amount more. You've added substantially to it, you say, which is now a 5% position. Talk to us.
Yeah, and it held up better than the big six, if you will, over the last couple of days. This is not a Mag 7 play at all. This is a stock that's down 13% from its highs. We know that the numbers have come down for the April quarter. We know that already. We know that China is weak and continues to be down double digits. But I do think that the April quarter will be better than expected. I think services will continue to grow double digits. I do think that the earnings picture will be double digits. Margins will continue to be a bright spot. iPhones are not going to be a bright spot, but I'm not buying it for that. I'm buying it because the stock is down a lot. It's trading at 26 times revised numbers. Historically, it's traded at 36 times, so I think it's actually a bargain. April quarter, I think you're going to get a buyback, a new one. Maybe it's $90 billion. They could certainly do more. And then in June, we get WWDC. We'll hear a little bit about AI and what that means for iPhone 16 and the pricing power that they're going to have. So I've been underweight this name for a long time, and I'm still underweight because it's 7% on my bench. But I do think it's an opportunity.
This is always sort of viewed as what you mentioned, the buyback being a bit of a backstop, if you will, right? Because they buy back more shares than anybody else.
Sure.
So they're going to, ideally take advantage of what's happened to that stock. But something's peculiar, though, when this thing just can't get out of its own way lately. And what gives you the confidence that it's going to be able to do that?
Well, I don't have the confidence that it's going to start working tomorrow, but I do think that this is an opportunity for the longer term. AI, even if they make some good announcements in the summertime, I mean, it's going to take a long time for that to kind of go through and filter into the numbers. But I just think right now it's so down and out. It's so really not liked at this point in time, right? I mean,
that's an understatement, right?
You've had a lot of downgrades, and that's fine. I understand why there would be downgrades. I'm trying to take the other side of that and trying to think a little bit longer term, because I still believe in this company and this story and the products.
Okay. So Jason Snipe, it brings me to you where I mentioned NVIDIA is bouncing today with several of the other names. So NVIDIA is back above $900. Yep. Remember, it got to a high late last week, Friday, of $974, $975, somewhere around there. And then it had that massive reversal, and it got people, saying, okay, well, maybe the momentum trade's done. Maybe NVIDIA's topped. Maybe the momentum trade is over for a while. Maybe it's just too soon to declare that specific issue, that the death of the momentum trade is here. Because today's market would have you believe otherwise.
Right. So I think for me, when I look at NVIDIA as an example, Their RSI was 84 last week. It's today at 65. So they're absolutely, it run a lot. There is some repricing that's just going on in the semi-complex period. Broadcom, I know, Steph, that's one of your names, and others, right? So I think that trade is definitely not done. I think it's just taking a break. It's digesting some, and I think it will continue to do well throughout the year. But I think it's just a little bit of a digestion at this point.
All right. So how, Josh, would we address this? Because there are a lot of notes being passed around on the street about this very topic, about the so-called momentum trade, whether now we're having a rotation that, you know, maybe the rally is, some say the rally's tired. Others would say it's not really tired, it's just rotating. How would you address this particular trade? Because it's been the most important trade in the entire market.
I've been saying for 3 weeks now, talk to me about anything but Mag 7. I'm not interested. Those stocks, one by one, are breaking up trends and sitting in no man's land. There's nothing wrong with that. These are some of the biggest winners of all time. But there are other stocks that are set. Look, I look at the best 100 stocks in the market every week. That's how I start my week. Monday morning, show me the 52-week highs with earnings growth, with technical setups, and increasingly they're happening away from the top 10 NASDAQ stocks. And that's great. It doesn't mean the NASDAQ stocks can't also go up. I own them. I hope they do forever. It's great. Give me 10 more oracles. But that's not the story right now. The story right now is in travel. It's in anything related to the consumer, financial services. Can I show you a chart, please? Can we put up Fiserv, FI? Other than Stepanie Link, if you're sitting on the desk, raise your hand if you could describe what this company does. Okay. Look at this stock. Will you look at it? It's not Mag 7. It's not AI. There are so many charts like that. Look at Marriott, MAR. The CEO from Delta just said the last week was like the biggest week they've ever had.
You need to broaden the charts out too. Look, beyond, yeah, there you go.
Yeah, let's not do 4-hour charts, guys. Look at Marriott, MAR. This is just, if this breaks 250, what's stopping it from going immediately to 300? I don't know. It's not AI. So there's nothing wrong with NVIDIA continuing to go higher. I have no problem with that. I'm in it. But I want anything but Microsoft, Apple, Alphabet. It's not where the winners are right now. They're pretty much happening everywhere else.
Jason Snipe, Wolf today says excess in the market starting to unwind. And, you know, Josh is speaking to that. Even as the momentum trade was working, though, the stocks that Josh is talking about, you know, we mentioned those throughout the last couple of weeks as other areas where stocks were hitting new highs. Yep. We said it was the Marriotts, a lot of industrial names, yep. A lot of some of the consumer stocks, the financials like JP Morgan, Bank of America. Right. To his point, these other areas that have been working sort of below the surface, they just haven't been getting as much pub or love as Mag 7 or around the other, you know, areas of momentum.
Yeah, I mean, because they're not up 80% like NVIDIA is, right? You know, but to Josh's point, I mean, Marriott, Costco, you know, a lot of the industrial names, healthcare names, energy, staples, you know, a lot of these names have done well over the last 3 months and also year to date. And I think, again, it's a broadening out that we continue to talk about week after week. But I think this is the real deal, because we talked about it a little bit in November, and I think it was a dovish pivot from the Fed, and it was somewhat of a pump fake. I think this is real.
But it's because of earnings.
Absolutely.
So tech was up 7%, comm services was up 9%. This is 4Q earnings. But healthcare was up 8%. Financials were up 7%. Industrials up 6%. Right. So if they're up just as much as tech, why shouldn't they?
The price action should follow.
Absolutely. And that's exactly what is happening. Right.
All right, guys, this is the part of the show where I break down the stocks that were mentioned in the CNBC clip. Today we've got 10 stocks to break down, so we're going to go through them pretty quick. You can see them right here. We're going to start with eBay. So as you can tell, they are in a channel, more or less. They are starting to break out of a channel, and they haven't made it to a new all-time high, though. So you can technically say until we get past 52.20, they can still get rejected and come all the way back down to the bottom part of this channel. If they do hold $50 a share and continue to make a base and then go higher, it is starting to look bullish. If they get rejected and start making price action under 50, guys, watch out because there is a huge gap right here that also needs to be closed. Let's take a look at NASDAQ. This is not the NASDAQ market, this is the NASDAQ market makers. So what this is a nice looking double bottom here. The stock is kind of all over the place. It's a little weird. It's not too consistent. It's kind of jagged. It gaps up and gaps down a lot of times. So definitely a longer term hold, not a day trade, I would say. Relative to this 200-day moving average, it is looking good. It's above the 200-day. It's broken above. It's holding the 21-day. It's on a nice pump right now. And I'm pretty sure he said there's some insider buying. So stock might be good for the upside. Now we'll look at CBRE. This has a descending support level that now broke up out of these last recent highs and is now bullish. As long as it can hold $90, it should remain bullish, guys, and should head back to all-time highs. FI, another company I've never heard of, they have a very, very strong support here. It took them years to be able to break it. Now that they've broke it, they are taking off. They're holding this 21-day moving average. They've touched it several times. If they break it, there could be a pretty significant pull-off, or at least a sideways consolidation, so just keep that in mind. Marriott Hotels, I'm sure we all know who this is. I haven't seen the stock though. They've got a pretty good support around $180. They've got another support around $210. This stock is looking bullish. Look at the way it tried to break down under the 21, jumped all the way back up, and is now perfectly curled and held it. I would say, guys, this stock is going to break 252 and shoot up a good couple percent. This is looking very bullish in the short term and the long term. Now, this stock, I'm not sure why Jim is messing with this at all, other than it's dropped. Let's see how far from the very top to the bottom. 80-something%. Okay, so he's just throwing a couple dollars at it, thinking that maybe it'll make a couple 100% on the way back. But if it doesn't, I'm sure he'll lose it. I'm not even going to break down this stock, guys. You shouldn't be in it. There's no reason. NXPI, a lot of weird price action. Okay, must be a lot of lower volume traded, but they have finally broken their all-time high and are starting to look bullish, guys. As long as they can hold 233 and start making bases higher than that, hold the 21-day moving average, they are looking bullish as well. Costco, I'm sure some of us shop here cannot believe how good the stock is doing. Look at this. Anytime a great company consolidates for this long, look how great of a buying opportunity it ends up being. This is not the stock ending. This is not the top of Costco. This is not the end of Costco. This is them just taking time, maximizing their business model, and getting it perfected. Now, we did just break through the 21-day moving average on some pretty nasty selling pressure. Let's see how far they dropped. And there must be some news. This stock has not traded like this. Oh yeah, 9-10%. Coming to reject. Now, if they don't get up above this 21 and start making it a support and holding it, guys, if they just come up and test it and then get rejected, we're definitely going lower. Maybe to the 700s, maybe to 675. It depends what the news is that is out, but technically, I would stay away from it right now with this huge rejection unless you know what is going on. Apple, one of my main holdings. I've been adding to it around here because of this exact support. It's under the 200-day moving average. It's well under the 21-day moving average. And it's just a great company, guys. I'm pretty sure we'll look back and it will have a leg just like this. Last time Apple did any price action like this, it went straight up for months and months after that. So that's what I'm looking for. This is a great company. Once they introduce AI and put it into their smartphones, they'll have a whole new AI mega cycle, guys. And this is just going to take off again. And lastly, NVIDIA, the rocket ship. Everybody thought on Friday, man, it's crashing. This might be the end. Nope. It just wanted to get a little closer to that 21-day moving average, guys. We're having a 5.2% day. That is a massive, massive day on a stock that's had a run like this. So the momentum is definitely still here to play. I hope you guys enjoyed the video and the breakdown. If you do, smash that like button and subscribe. Share it if you know somebody that likes the video. And thank you for watching. I will catch you in the next one. Peace.